3, 2, 1, and 0, and liftoff.
Hey everybody, it's Greg Lafferty, the Rocket Guy Real Estate Investment Network. We're going to talk about some cool stuff today because that's what we do. We talk about real estate investing, how we get into it, how we stay away from it, if it's for you, if it's not for you, those kind of things. So let's talk about investment vehicles, because when we look at our why invest in anything, right? So let's look at some of our options out there. Maybe there's paper assets, stocks and bonds, maybe mutual funds that hold stocks and bonds, maybe 401ks that hold mutual funds that hold stocks and bonds, other acronyms and other things that I still haven't figured all the way out. 401ks, IRAs, Roth IRAs, SEPs and ISEPs, and I don't know what all they make this stuff up. Stock guys are sales guys, and everyone knows that a sales guy just makes things up, and that's what they do. They package things, and all of a sudden there's some kind of IRS code, and voila, right? We have something to invest in, a vehicle. And that works for some people, works for me, and certain things. It's just not my primary mode. It's not what I really get into and get excited about. It's kind of like the break glass in case of emergency fund out there, sitting out there. But that's one investment vehicle. Maybe you're a little bit more sophisticated and you want to trade in commodities. Maybe you want to take out options on pork belly futures or crude oil, or buy a whole train load full of corn, right, and do commodities. And that's okay. A lot of people make a lot of money doing that. It's just not my thing, but certainly something you should investigate. Maybe it's tangibles. Maybe it's jewelry and art. If you find a Picasso in my house, I probably bought it at Hobby Lobby, okay? So anyway, that's just not my thing, but some people make a ton of money trading in fine art and jewelry and antiques and things like that. Maybe you're into exotic cars. Maybe you can roll up in a Lambo and flip that thing and make a few thousand. And my boys really love those things. They love watching YouTube and those flashy guys that get out there, the kids that get out there, they rent a Lambo for the day and roll up like they own it. And just call me when you paid cash for that thing brand new and you don't really care if it wrecks the day it comes out of the driveway or not. Then we're talking. But these guys that act like they're something, it just cracks me up. I just don't think that I need to pay for an exotic car, the oil change and everything else that's involved in all that. Is way too much management for that. If you think toilets and tenants are bad, you ought to try a Lamborghini. So not my idea of a good time. Maybe I'll change my mind one day, but I love my truck. What about real estate? That's kind of my thing. Single family, multifamily, raw land, retail, industrial, office space. All those are different classes of that particular asset base, and all have their pros and cons. So let's compare real estate to other classes, because that's what we do. I have stocks and bonds and all that kind of stuff, and all that's good. But my primary investment vehicle, and what we're here to talk about on this channel, is real estate investing. And that's what you're here to learn a little bit about. So let's talk about real estate investing. First of all, one thing I like about real estate is kind of a permanence of investment. That's what I like to call it. That building will stay there. It'll stay there 100 years. You maintain that building will last for a long time. You get a share of stock, it's a piece of paper, light it on fire, boom, you're done. Okay? So that's not really how stock is normally held. I get it, but that's the concept. Okay, permanence of investment. If I want to, maybe it's able to be insured, right? I could put an insurance wrapper around my piece of real estate, my property, and if it burns to the ground, the insurance company will help me build it back up. And so I'm able to insure that. If the value of Amazon stock drops to the floor, unless I'm pretty sophisticated and have some options and puts and other things kind of wrapped around that, my value of my investment is going to drop to the floor. It'll have a fire sale. If they declare bankruptcy tomorrow, my stock is worth about zero. Okay. Whereas a piece of real estate, I can insure it, protect it, love it, hold it, and it lasts for a long time. I have a lot more control in real estate in how it's managed if I want to be very active in it. So I have a lot more control as opposed to the stock price. I can't really tell the chairman of Coke when he can fly on his jet and when he can't. Okay? Because as a pilot, I know every time you crank that turbine up, the fuel is spitting out the back and throwing money out there with it. Okay. So I can't control when the chairman of Coca-Cola gets in his jet and flies across the country. I can't control that. There's certain things I can't control about the share price. I can't control some hedge fund going in and out of the stock position all the time and floating the share price up and down. I can't control that. However, what I can control is I can watch the market factors in real estate, and I can kind of generally control what I rent it for, my expenses, how I spend the money, what do I improve, what I don't improve, and make those day-to-day decisions if I want to be more actively managed, right? If I want to hire an investment manager, a property manager, I can certainly do that too and let some of that control, delegate some of that control out to them. So I don't really have to manage it, but it's certainly the way I've chosen to do it and kind of built my infrastructure around that mode. There's some tax advantages, right? A lot of tax advantages. One time a buddy of mine said, "Hey, Greg, you really need to buy that fax machine because you can write it off on your taxes." I'm like, "No, wait just a minute. You mean I got to spend $100 to save 30? Huh, that sounds like a good idea. Not. So, but there are tax advantages of owning real estate. And one of the primary tax advantages I love so much is this thing called depreciation, because the government allows you to write off a portion of the value of the structure every year, right? Sometimes there's some accelerated modes. You can write off a huge portion year 1 or through year about 5, whatever, and you can do some other things to accelerate that. But that is a free write-off on the taxes that you really didn't have to pay for, which is amazing, right? If you buy a property and you finance part of it, but you get to write off a portion of the whole thing, even though you didn't pay for it, that's pretty fantastic. So I love some depreciation. Now, depreciation can be real. We joke about that in the industry too, right? So the roof actually does lose some value over time. The air conditioner unit actually does lose some value over time. You do have to replace those puppies, right? So there is some real kind of things that happen in depreciation, but from a sheer tax advantage, it's amazing. How about a 1031 exchange? I'm going to throw out some new terms here today. A 1031 exchange, great tax advantage where you can sell a piece of property and kind of defer the gain, the taxes on that gain, and kind of kick it down the road by buying replacement properties as you go. And then when you die, your heirs get to inherit it and sell it and put the money in their pocket. So there's some complications. I know I simplify this. If you're a CPA, go ahead, fire me up, right? But I'm trying to keep it simple, stupid, okay? So if you could kind of work with me on that, this is basic education. The other thing that's awesome that just came out in the 2017 tax code, right, that the Trump tax plan's fantastic. Thing called opportunity zones, where they've designated certain parts all over the country, certain communities all over the country, where you can take some capital gains from the sale of a business or sale of a stock or sale of real estate and push it into these opportunity zones, improve the area, double the value of the building, build some new buildings, whatever it is, and certain restrictions and other things like that. But then be able to defer the capital gains, be able to lower your capital gains, and then later sell it without capital gains, which is fantastic. It's amazing. It's leveraging the capital markets, the real capitalism, to push into these communities and to really improve them. I love the opportunity zones. I'm really stoked about that. And it's awesome. One of the other things that I love about real estate is that you can leverage real estate. And somebody says, "Oh, I don't like debt. Debt's bad." Well, I don't like it either. Okay. So when I was young and dumb and running around stupid, I about went bankrupt. Too much leverage. Buying condos on credit cards. Well, I got a credit card. I might as well max that thing out. Woo, boy, that was crazy. That was some crazy gunslinging days out there, right? But I've learned. But you can structure it and put it on a nice payment plan, stretch it out, and put it on something consistent so you know how to predict it. Don't just buy a condo on a credit card where the interest rates change, payments change. Oh my gosh, that gets crazy. But as opposed to like a stock account where you have a margin loan with variable interest rates and other things like that, and if the price of the stock goes way down, they call the margin loan due. Ooh, you might not know that, but I lived through the 2001 dot-com bust. Okay. It was crazy. Margin loans getting called all the time. Okay. And somehow you got to reach into your pocket and find all that money. Real estate's not so much, right? With real estate, you structure the debt out and help you buy the property. So so that you can buy $1 million property with 300,000 down, right? So can be done, right? Can be done. Can buy $100,000 property with 20,000 or 30,000 down. Okay, you can do that stuff. Or you can leverage it 100% and go, all the way to the wall and go crazy on yourself. And I don't really recommend it, but you can. Okay. The other thing that's really nice about real estate is, hey, the tenant is buying your asset for you. Wouldn't it be nice if your grandma bought all your stock for you? Hey, grandma, I tell you what, I'm supposed to be putting $100 in every month to my stock account, to my 401k. And when I do that, my employer is going to match it another $100. So if you give me $100 and it goes in, I don't have to put it in. And then voila, I'll be rich when I'm your age. Okay. When I'm 80, I'll have 100,000. Okay. It'll be perfect. So, but with the tenant, right, in a rental market, the tenant is actually buying that asset for you. So I thought a long time ago, I was sitting there as a young man and some stock sales guy was coming up and saying, well, if you put $50 a month, and then over the next 100 years, you're going to make $100,000. It's going to be perfect. I sit there and go, well, wait just a minute. Aren't you supposed to be contributing to this somehow? Isn't this supposed to grow without my contribution? So, because a lot of times I look at my statement, I'm like, well, wait a minute, I put some of that money in. So, but in real estate, the tenant is actually contributing to your wealth, right? Every month that tenant pulls in, as long as you keep it rented, let's be real. Okay. Sometimes there's vacancy, sometimes there's maintenance and all that stuff. But every time you make that mortgage payment, a portion of that principal, right? The principal portion of that mortgage payment goes into your HIP National Bank, right? And that's your magic savings account. That's what it is. And the tenant helped you pay for that. So you didn't have to come out of pocket, and it all relies on cash flow. I get it. You got to have cash flow. Meaning, what's cash flow? Well, cash flow is you got to make more money in rent than you spend out in expenses, taxes, insurance, maintenance, mortgage payments, everything, right? Cash flow. So you got to have cash flow. Positive is what the very sophisticated real estate investors call it. Positive cash flow. Because if you have negative cash flow, that's a bad day. That means the money comes out of your HIP National Bank into somebody else's pocket. Right? So, but if you have positive cash flow every month, then that tenant is helping you buy that asset. So unless you have some real significant employer match on your 401k, meaning you don't put anything in and the employer does it all, or grandma gives you all the money, it's a little hard to find that, right, in other places. So those are some of the reasons I love real estate above other asset classes or types. So I hope you'll join us here at the Rocket Guy Real Estate Investment Network, where we start to kind of peel the onion back on real estate investing. And I hope that we can educate you. But more importantly, I hope I can educate my sons so that one day when they wake up, they have some stuff they have to figure out of all this stuff I've put together. They'll pay attention and they'll listen. So anyway, we'll try to come at you once a week, give you some good content, and I hope you'll join us really soon.